Today, we're having a look at whether Nvidia is actually overvalued or not. And the trading takeout today is going to be whether you actually need a trading strategy. But first, make sure you like this video and subscribe to the channel to let me pop up in your YouTube feed every day, giving you the best market commentary, tips, and tricks so that you can improve your trading edge. Interesting that I've been noting recently is the sort of weird fear about Nvidia increasing in price so rapidly. There's so many people that seem to think that it's time to sell it or short it even. And I really think that is overblown. They're looking at metrics like price to earnings, and they're saying that Nvidia at roughly 65 to 70 PE ratio is really overbought and that it's overvalued. But I took a look at some numbers and I noted that within the AI/chip sphere, the average price to earnings is 124. Now, Intel is at 118. Is that considered undervalued as well or overvalued? AMD is at 335. Again, same question. And there's a few others that are ranked way higher than Nvidia. Nvidia increasing share price while their price to earnings ratio is dropping actually signifies a stock to me that is continuing to be undervalued by the market. Because if the price is increasing while the PE ratio is decreasing, it shows that the earnings are actually supportive of said price increase. Now, it goes into sort of this psychological fear of, missing out, I guess, at the end of the day. And people are trying to make the same returns on the downside as they could have attempted to on the upside if they had just stayed long. I think people are missing out the key factors that are driving Nvidia's rise. And really what traders and investors are doing is they're pricing in the next 5 to 10 years. Now, forward PEs probably are better reflective of Nvidia's situation. But even these are just still, analysts' forecasts. At the end of the day, Nvidia is becoming the monopoly in the market. There is no one else that can compete with them in the chip sphere in terms of the advancement of the technology. And I think they have a seriously strong moat amidst the cloud data server sort of tech and also the chip tech. They're even servicing sovereign nations for their AI programs. So I think in terms of wanting to sell Nvidia in the short term, sure, there's going to be some corrections. There always will be. But over the longer term, what I envisage is a nice, smooth curve to the upside with some stock splits on the way, absolutely, because you can't let your share price get too expensive. But the way that I see it is that they are at the forefront of a new revolution. They're basically the Apple that was in 2006, pre-iPhone. This is where I see them, and I do see them on the same trajectory as Apple. The fact that China is so desperate as well to get their chips via the likes of Singapore, India, is a really big testament to how well they're doing, considering China can't develop their own. The US has banned exports to China, which is why they have to go via third countries. And just this alone, I think, shows the true power of Nvidia right now. Do you actually need a trading strategy to be successful in markets? Well, sort of yes and no. I think many people get fixated on the idea that you need a mechanical strategy telling you what to do at every single point. But in my view, you need to be flexible because no one can guess the future of markets. Past performance is not indicative of future results. I think the better term to use is to have a trading framework. And what this allows you to do is work around certain principles that can stay the same over time, but adapt with the market context. So what you need to do is develop some loose rules around each component: risk management, order entry, trade management, etc., that then let you move with the context of the market.